Hey everyone, Marco Palmero, founder of Ulysses, and in this video I want to cover with you some of the channels that you can utilize to find profitable small businesses that are available for sale or profitable small business acquisitions. Now, this video is for all these people or small firms that are currently in the process of struggling in finding deal flow, finding opportunities, and generally speaking, finding good opportunities for sale. So companies that they can acquire, that they can roll up into their own portfolio, or that they can acquire to then run and oversee. The idea is to break down some of the steps that have worked for me and my clients over time and over years across sectors and across countries, so that you can take some value out of it and use some of these solutions to find deals on your own. So I'm going to dive into the list that you see here on the whiteboard. There's quite a lot of sun that is pointing on my face, so hopefully you can see me just fine. And the focus of this video will be tiny small business acquisitions. So I'm talking about all these deals that are below $25 million in ticket size. Anything that starts at 100 grand really will work. So the range is between 100 grand and I would say 25 million. So for all of you watching this video, if you're looking to find acquisitions that are within that price range, this is the right video for you. Now, this video is of course not targeted towards all these big firms or private equity funds that might have different ways to get their own deal flow. This is specifically targeted towards the SME sector, because over there a lot of transactions are off market. It is quite hard to find good deals using conventional solutions, and I'm going to explain that in a second. And so it is important, in my opinion, to create a solid deal flow pipeline that is fueled by different instruments or by different channels. Now, having said that, who is this video for? As I just said a few minutes ago, all these people or small companies that want to increase their deal flow pipeline. Maybe they want to do it on their own, or they then want to work with somebody to get that done. These tips will potentially help you in finding new channels for getting deal flow, so you can either apply these solutions on your own or hire somebody to get that done. Now, having said that, I'm assuming we're starting our deal flow origination process from the very beginning. So let's take a step back and talk a little bit more about what is it that we're trying to accomplish. What is the objective here? So as I said, we're looking to find profitable small businesses that are available for sale, and there are very small in size, right? Because 25 million is a cap, is not a big company. We're probably talking about a business that is generating 3-4 million in yearly EBITDA, give or take. And, if we put a multiple of 4 or 5 on it, that's probably the value that we're going to get, in anything below that. So we're talking about mom and pop shops or companies that are already decently structured, but they're not too big. And as a consequence, what we need to look for is all these tiny businesses that are scattered across a certain geography. If you're in the US, you might want to target a specific county or another specific area. If you are in another place like the UK or Europe, you might want to target the entire nation. So depending on your needs, you can use these solutions and kind of like adapt the strategy to fit your own needs. And I'm going to share with you what has worked for me across different geographies, including Middle East, Europe, United Kingdom, and United States, so that you can potentially take some ideas out of this video and use them for your own benefit. Now, with all that being said, we're looking to find small transactions, small deals, and what we need to be aware of when we initiate this process of looking for deals is that most of the good deals are not going to be on the market. As I mentioned in many other videos, Good deals are not necessarily listed on any marketplace or any site, so it's very hard to find the good deals unless you know where to look. And what we want to do with this strategy is create a very solid ecosystem for finding deals so that we can reach out to basically any business owner in the industry that we're targeting, in the market that we're targeting. And that has worked very well for me when using different channels like emails, calls, networking, social media, affiliates, brokers, investment bankers, because it created a sort of web around the industry, and I was then able to interact with every single business owner using different channels, because some of them might be comfortable with one channel, others might be comfortable with another. And so it is important for us to reach out to them using the channel they're more responsive, where they're more responsive. Having said that, I covered in another video how all these channels can be combined together to create a synergistic strategy. So I'm not going to dive into that topic in this video. Go watch the other video if you're interested in that. And of course, if you're interested in getting somebody to do all this work on your behalf as a done for you format, you can check the form below, fill out your information, and provided we have slots available, we can have a conversation and see if there is a way we can help you in finding deals. But you started your journey and you wish to find deal flow. Let's say that you're working on your own, you don't have a big team yet. Probably the two channels that are going to be very useful for you in the beginning are calls and emails. And of course, the network that you already have. But I'm assuming you don't have a big network yet because you just started the process of looking at acquisitions. So calls and emails are, of course, a sort of like an outbound activity that we do that, if done correctly, can generate leads for us. Now, a lot of people get these two channels wrong, and they interpret it as a sort of like a spam activity, which is not what we want to do, because we want to position ourselves as a sophisticated buyer. And if we just spam people, we will not, be perceived as that sophisticated buyer. The ultimate goal is to connect with business owners that have a genuine interest in selling their business and establish a serious conversation around potentially buying that asset. So we don't want to spam. We don't want to blast out people with general messages or emails. And so we want to approach email and calls in a very strategic manner. Now, some of the things that I wish to cover in this video are the tools and the ways I used every single channel for maximum effectiveness. Email first is a very complex topic because there are a lot of people that are going to tell you how to use emails to reach out to people, how to do cold outreach correctly. And I think all these people might have very good advice, but that advice is not necessarily declined towards small business acquisitions and towards finding profitable businesses for sale, because many of these people might teach you how to do cold outbound for B2B services or for B2C. And most of what you're gonna do and most of what they're gonna tell you to do is outreach focused on closing a sale. Well, in reality, what we want to do here is just generating leads and interest, because our leads and our close, so to speak, is a motivated seller that is interested in having a conversation, having a meeting with us, and ultimately talking about the idea of selling the business. So the lead generation process is similar, but the end goal is a bit different, because we're going to be the buyers acquiring the asset, if you get what I'm saying. So the way we want to approach email is a bit different. We want to be more specific in the way we craft our messages and create a high level of personalization in every single message we send out. So the best way I found so far to do that in a proper manner without sounding spammy and without being flagged by Gmail and the other tools that, the other inboxes, so to speak, is with Instantly the AI. plus any other email list that you might want to find. Now, I'm sure you're gonna be screaming, on this video saying, Marco, you're diving deeper into the technical details, but you haven't told me how to get these emails that I can actually message and that I can actually talk to, right? How can I find the emails of these business owners? I'm going to tell you how to do that because there are different ways you can go about it. The point is, we're going to use and leverage Instantly.ai as a sending tool because we're not going to blast emails using our general inbox or using autoresponders. I mean, Instantly can be considered as an autoresponder, but it's a little bit sophisticated compared to others. And I think the goal and the reason why we use Instantly is because we can automate the process of outreach, but we can also create highly personalized messages, and we can set up Instantly in such a way that our emails will very rarely be marked as spam. And that's the ultimate objective, because our goal when we use email to find profitable businesses for sale is to land into the business owner inbox and then make sure the guy reads the email and potentially responds if he's interested in exiting the business. So Instantly.ai helps you with this in many different ways. I've used it successfully with crazy reply rates, like close to 8-10% reply rates for certain campaigns in certain countries and certain geographies. So yeah, it has been very, very effective for me. You can check out Instantly.ai by yourself. There are a lot of technical details and setups that you need to go through, which of course I cannot cover in this video. But if I have to recommend a tool for you to do outbound via email and find profitable businesses for sale, Instantly would be one of them. Now, let's take now a step back and talk about how do we find the emails of these business owners. Well, that's kind of like, a problem that has different solutions. You might already know people that are in the industry. You might already have contacts of people. You might already have lists. I'm assuming you're not going to have anything available as of yet. So I'm going to share with you some of the strategies to find emails. Again, you might want to use some of them. Some of them might not be working so well for you in your specific industry or specific country, but generally speaking, you can combine these things together to make sure they can deliver the maximum output for you. So, emails. How do we find emails? I don't recommend buying lists. I've tested lists that I bought. Not a lot of them have been effective, to be frank with you. A lot of bounces, a lot of emails that were not active anymore. So I would recommend other approaches like tools where you can scrape emails, but tools that are actually updated. An example that comes to mind is like Apollo.io. That will work very well to find the direct emails of business owners within a certain industry, within a certain country, and maybe even within a certain employee count. So it will give you a lot of filtering option to find good emails, and then you can scrape them. It's quite pricey, but it's worth it because I've been able to find deals that were quite good through that instrument. So I used Apollo to scrape some leads. I messaged them through Instantly, and then I established a conversation in an in-person meeting. That's one thing. So you can use Apollo, you can use other tools. I mean, I've used Apollo in the past. It has worked very, very well for me because the database is quite rich and it is also updated regularly. So most of the emails are going to be pristine, accurate. In addition to Apollo, what I like to do in combination with the tool is go for a map scraper. And this is something that has worked very, very well when we target specific geographic areas. Because let me give you an example. Let's say that I want to find all the dental clinics in Miami. And maybe Apollo doesn't have the full list of all the business owners' emails in Miami. What I can do is use a map scraper to find all the businesses that are geographically located in Miami that are within my industry, and then scrape the data and the emails using the map scraper, so that I can then cross-check the two lists and see which business is missing, so that I then know whether or not I want to look for these business owners' emails elsewhere, or I just want to email the general inbox. Because of course, the map scraper is generally gonna find the general inbox, right? Not the personal email of the business owner. So it's a little bit of a trade-off of quality, but I think it's important because then it enables me to get a clear picture of how many businesses I can get in contact with, using the business owner personal email, how many other businesses are there, and how can I connect with them, maybe using another channel. It might be a direct call or social media or else. So I use these two tools in combination for scraping data from the internet. There are also a few other platforms where you can find business information in context. And of course, all these information is supposed to be used following the rules and regulations of your own country. I don't know where you are currently and what are the rules for scraping data from the internet, but follow the rules, and if you're not allowed to do these things in your own country, just adapt this strategy and maybe use the tools that I'm going to share with you a little bit differently. But having said that, map tools, other scraping tools, there are also public records. So many countries and many industries have company public records. It's public data. Everybody can access that. Nothing wrong about going through that database and see all the businesses that are there. Sometimes even insurance companies list this information publicly, depending on, again, the country and the industry you're operating in. So you can go through these lists, and they're very helpful because they can find all the business names within a certain area. And of course, they're going to be less accurate than a context scraper because they're just going to find you the name of the business, maybe the website, sometimes the email. But they're going to give you a very good perspective of how many companies are within the area. And when you cross-check it with a scraper, you can then understand the percentage of emails that you currently got and how many more you can get, or how many more you need to reach out to using alternative channels. Now, other ways to find emails, well, you can use a combination of the other tools, which I'm going to explain later. For example, affiliates in social media can really help you in finding emails that you can then message. So the long story short is there are tons of ways to find emails that will greatly depend on your industry, your country, the rules and regulations for finding information. You got to be a little bit, smart around finding data. There are a lot of ways you can do that in a very legal and transparent way. Do these things and initiate the process of building up a list of leads. In terms of how we outreach to these people, we don't want to, again, sound spammy because spam is illegal. We want to reach out with a very plain message that can land into their inbox and ultimately deliver, the message that we want to convey. The idea around the email is to just spark the interest to potentially then convert the person to a quick call or maybe a quick Zoom meeting, which is kind of popular nowadays. So the whole concept of emails is just pinging the guy, see if he's interested, and then moving to the next step. So I don't want to write long emails. I just want to write plain and simple emails, a few lines mentioning who we are, what we do, and what is that, the reason why we're reaching out to them. I've found that a lot of people are very responsive to this type of messaging because it's not invasive, it's genuine, and it's keeping it strictly professional. And of course, again, you gotta follow the rules and regulations of your own country. I don't know where you are, but based on that, adjust the messaging. What I found to be very, very good when it comes to cold emailing is plain text, nothing fancy, a little bit of personalization about the company, so you can do a little bit of research around the company, or you can use AI to add personalization elements into your email, and then you stick with that and you test it. You test it over 10, 20, 30, 40,000 emails, and then you see how it performs. I had reply rates as low as 3% upwards to 10%, depending on the industry and the country where I was testing this. Of course, always give the person the option to unsubscribe. We generally would like to do a email sequence where we go like 2-3 steps at least. So we have an outreach message, a quick follow-up, and maybe a closing message. It really depends on you and how much you want to test with this. I found that 2-3 email sequences are the ones that perform better. Longer sequences are just, irrelevant. There's no point in doing that, because either the guy is going to be interested in selling the business or not. So it's a very quick answer, right? Am I interested in selling my business or am I not? If I am, I'm going to reply quickly, and if not, kudos to you. So the point is, we send out these emails. We want to reach out to the business owners. We want to maximize open rates and reply rates for the people that are actually interested. And the way to do that is by keeping the emails very clean, simple, and pristine, avoiding spam, avoiding any fancy stuff. Just reaching out and mentioning that we're interested in potentially acquiring assets and we would like to talk with a guy. And I can potentially attach some templates to this video, but of course you need to work around that on your own and see what works best in your industry and in your country. There are a lot of variations that you need to test, and I cannot outline them all into this video. Now, the email will give you a solid foundation of leads if you build it correctly, because instantly will automate the process and personalized emails will be sent out daily. Once you have that going and you see that certain amount of leads are coming in, then you can systematize the process and it will keep bringing you leads. Of course, you will need to feed them emails continuously, but provided you know how to find these emails through the channels that I mentioned or other channels, you can then feed the machine and keep receiving replies until, of course, you saturate the market when it comes to reaching out to business owners. Now, one of the problems that you're going to face when you email a lot of these people is that, well, of course, a lot of them are not going to respond. And also, when you're going to scrape out for information, you're going to see that you cannot find every single business owner's personal email from the get-go. And so most of the times when you scrape maps or when you find information online about businesses in the area, you're only going to be able to find the business inbox. And that's not really something that I would recommend you email, because it's just going to land where clients send inquiries for the business, and your message rarely is going to be read by somebody who's relevant. And so when you are into that situation and you kind of have these two lists, one of which that is personal emails of business owners, the others is just general inboxes for the business. I like the idea of taking that second list and using it for my call output, because what happens then is, okay, I cannot email these businesses because I'm just going to land in the general inbox. But what I can do is to interface with the person at the business and potentially get through the assistant and talk with the business owner directly. That's a cold calling effort or a call effort that I can do, or my team can do, to talk with the business owner directly. And so in that particular scenario, we have a perfect integration of email and calls, because two lists are going to work for two different channels, and they're going to be complementary with one another. So you can potentially have your emails that are running, and at the same time you're making calls to the other businesses that aren't within that list. And so from a call perspective, I like the idea of using, I've used in the past close.com, but of course it's entirely up to you what you use. What I found is that Close.com is very good because it has this tool called predictable dialer or something. I don't know if they still have it. I'm sure other tools have that too. I've used close.com in the past, so that's what I'm suggesting. But the point is, when I'm making calls, I like the idea of maximizing the output that I do and avoiding wasting time dialing numbers. And so if I input my list on close.com, I can just, every time I hang up, have another call dialed. And if I do like 2, 3, 4 hours of cold calling, most of the time is going to be calling time, and it's going to be very, very good. Plus I can get specific numbers for the country or the region I'm calling in, and that is increasing the chances of, getting assistants or business owners to pick up. So again, the tool is just a suggestion. Use whatever you like. I found it to be very good. Of course, if you already are in sales, or if you have a past experience in sales, you're gonna know a lot more about it than, compared to me. So go for the tool that helps you the most. The point I'm getting at here is I want to maximize the amount of calls that I make per unit of time. And the concept of calls is, again, not being spammy. And the objective is getting through the assistant to talk with the business owner. Now, from that perspective, I'm gonna make a lot of cold callers scream now, because I'm gonna say that I don't necessarily believe that you need to be excellent at cold calling, or that you need to learn crazy persuasion techniques to get through every single assistant. Simply because my idea is, how can I avoid talking to the assistant and just connect with the business owner directly? What I've seen when I was making 300 calls a day was that many times I was wasting my effort and energy trying to get through an assistant. And once I got through, the business owner simply wasn't interested. And so I was like, okay, even if I get better at getting through the assistant, and so I get through more people, then there's still the variable of the business owner being interested or not. And I don't like that idea, because it takes a lot of effort to get to that point, and it doesn't generally justify the time that I'm putting into it. Now you might say, well, Marco, maybe you weren't just as good. Might be true, but what I found is that there are a few simple tricks that we can use when cold calling that can ultimately maximize the responses that we're going to get directly from the business owners. And that's what I'm going to share with you in this video. So the whole idea is, I want to call these businesses, but I don't want to talk with an assistant, because especially in countries where calls are very common, like the US, Europe, UK, assistants are very well trained to screen calls. And even if we position ourselves as professionals that want to reach out for a business joint venture or something like that, a lot of times they're not going to get us through. They're not going to let us through. And so how do we avoid that? And how do we talk with a business owner directly? How do we make sure he's the guy picking up the phone? Now, in the small businesses, most of the times the owner of the company is spending a lot of time at the facility, because it's almost like his baby, right? And so what happens is, the guy is gonna show up early, leave late, sometimes works lunch times, and even weekends. And so what I realized, and I realized that actually for a funny reason, I'm gonna tell you this story. I was making calls from Spain to the US at the time, because I was traveling back and forth. And so I was 6 hours ahead of the US, and so I was starting my cold calling efforts early in the morning for the Eastern time zones. And what I realized is that the pickup rate from business owners was actually much higher before business hours compared to normal business hours. And ultimately, I figured out that, of course, when employees are not around, the chances of the business owner picking up are significantly higher. And you might say, well, Marco, if you call outside of business hours, you might not find anybody. And yeah, that is true. But what it is true also is that outside of business hours, if there is somebody who's picking up the phone, almost 100% of the time is going to be one of the business owners or the decision makers. And so my point here is, if I call outside of business hours, I'm increasing dramatically the chances that a pickup is a business owner. So I've already skipped one step, that is getting through the assistant. And so with close, for example, that goes through all the numbers with the automatic dialer. Every single time a business doesn't pick up, it calls the other one, and it goes this way all the time until somebody picks up. And so I'm maximizing the effectiveness of my effort, because close does that for me. And every single time somebody picks up, chances of that person being a business owner skyrocket. And so what I will do is put my list into close, spin it out before and after business hours, sometimes even lunchtime, and on weekends. And the response rate from business owner was really dramatically higher. So I don't know, if for example, over 100 calls I was able to get through, let's say 10 business owners on average when I was talking with assistants. With this system, probably I doubled or tripled that. So it was pretty good. And also it gave me less headaches trying to persuade a assistant to put me through, while in reality I didn't even know if I wanted to talk with the guy in the first place, because the guy might not have been motivated in selling the business. So it's a long way to explain what I mean by this, but the short answer and the short solution for calls is that I realized calling outside of business hours really pays dividends. Plus, we don't mess up with the assistants that sometimes just want to do their job and talk with customers. And we are talking about calling about business opportunities and business joint ventures. They might get scared, or they might not know how to handle the situation. So I found that outside of business hours really works best. A note on calls is that I found them to be working better in certain countries and less well in other places, simply because, well, of course, calls are going to work very, very well if you're calling the person in English as their native language, or Spanish is their native language if you're calling in Spain. But the problem happens when you're calling places like the United Arab Emirates, for example, where every single person and every single business speak English, but it's not the primary language of all people. As a consequence, people understand a lot less, and sometimes it's better to reach out to the business via WhatsApp, because they can read the message and maybe translate it a little bit, and then give you a reply and maybe join a call. So it's about testing. What I've seen is that if you're calling a place using the language of that place, then you're gonna get, certainly you're gonna get results, because people are gonna understand what you're talking about much better. So in short, with the two lists, we can create a system that is already working very well, and that you can potentially run on your own, because you don't need a team to do calls and emails together, right? You can have the emails set up, start sending out the emails at the same time, just build up the list for the calls that you want to make that are not going to be reached out to via email, and start making the calls. What is interesting is that after some time, you can compare the data, and of course, if some emails went with no reply, you can call these emails again. So you can double check that business and create an extra layer of, let's say, outreach around that company. Now, I didn't mention what is the goal and objective of these two outreach strategies, but it goes without saying, and it is to connect with the business owner to talk about him being potentially interested in selling the business. And the reason why we're using these two strategies is because we want to talk with off-market deals. And many times, small business acquisitions might be available, but not listed anywhere. And so when we use calls and emails, we might need to do a lot of volume in order to get a tiny result. But that result that we're going to get is business owners that are interested in selling, and they're not advertising it. And those are premium opportunities, especially if the business is profitable, because we're not going to have competition. We're going to have preferential access. And if we build up the relationship correctly, that deal can potentially be a very good one for us. Of course, provided it checks out all your KPIs and profitability, criteria. But the point is, these two tools allow us to get off-market deal flow. And both channels are focused on getting in front of the business owner as fast as possible. Nowadays, a lot of people are getting used to Zoom. I would rather go to the meeting and see the person, especially if the business sounds interesting. Of course, before I go to a meeting, I generally want to have a little bit of a filter where I select the business based on certain criteria, and I collect from the owner some preliminary information which I can discuss later, maybe in the putting all together. But the point is, the objective of all these two channels is to potentially have a follow-up discussion and then a meeting where we go ahead and see the place after the business has been qualified. And so the idea is we go like outreach, qualify, and then meeting. And subsequently to that, we start, the DD if the business is passing due diligence and stuff like that. So I will talk about some of the strategies that have worked for me. Actually, I can do that right now and then move on with the others. By the way, if you wish for somebody to do and build all this system done for you and have a team of people help you in finding deal flow for yourself or for your company, it doesn't matter. You might be an investor, a search fund, or an entrepreneur. You can check the link below. We generally support a few companies that qualify for our criteria, and we help them with our done for you service that covers all of these, not only these two elements, but also the others that are going to follow. And we do that in all sectors, in all geographies. With all that being said, some strategies that work for email. I've seen the sequence email, call, email, or email, call, meeting to work very well. So the first one is I reach out, I have a brief discussion, I follow up with via email with some qualification question. The second is I reach out, I have a call, I qualify you on the call, and then I meet you in person. The first one is more linear, the second is escalation. For calls, I found the ones to be good like calls, email, another call or Zoom meeting generally, call, email / second call, and meeting. Of course, as you see, what we're trying to do when we first get connected with a person is to connect with another channel. So if we connect with email, we want to get the phone number. If we connect via call, we want to get the email. But ultimately, what we will do is chat with a person using the channel he's more responsive to. And we want to escalate the process to the point where we collect some initial data that makes us say, okay, the deal looks good, we need to invest some time into it, and then schedule a meeting because we want to go see the place. Of course, if you're in America and you want to buy businesses across the US, it might be a little bit of a challenge. If you're more geographically focused, maybe you have a 2-3 hours radius that you can drive to, that will work better for this strategy, because then you can set up all your meetings that are 2-3 hours away in a certain area all in one day and go ahead and see them all. And we will talk about that in the pulling all together. Now, network. As I mentioned before, you might have your existing network that can put you in touch with people and or professionals that can refer you deals. Network is very effective, but also difficult to track because, of course, you cannot predictably understand how many businesses are going to be sent to you and also how many good deals are going to be sent to you. With emails and calls, it's a bit different because you can track the input and also the output that you're receiving. So it's a little bit more mathematical. Networking is a little bit on hard compared to a science, but it still can deliver very good results, because what happens is when you network and you network correctly, then you can connect with people that will put you through business owners. And if a third party is putting you through, you're gonna have less hurdles that you need to go through in order to potentially close a deal. And so networking to me is effective networking, and it's not that bullshit thing that a lot of people preach online, like go to an event, clap your hands and talk with everybody, exchange business cards and do all that fancy crap, because that doesn't work. It's just a waste of time. It's just a matter of people, it's just a matter for people going out and trying to get some business, and we don't want to do that, because as I said before, for calls and emails, we're not spammers. We're not out there just sending business cards and hoping somebody will buy stuff from us. We want to build genuine relationships when we network, and so we want to network in the right places. Now, I found the best places for networking are private clubs, private business clubs, of course. I'm not talking about nightclubs. Private business clubs, because over there, of course, the target of the business club is going to be very narrow and is going to be specifically focused on what you're trying to accomplish. So finding business deals or doing business in some way, shape, manner, or form. Of course, these business clubs have joining fees, so you have to consider that as part of the investment for finding deal flow. But once you are in there, you can network with people that might get access to deal flow, might have access to deal flow, and then progressively build a relationship with industry leaders and people that can now or in the future do business with you in some way, shape, manner, or form. Another effective way to network is to have somebody, like if you have an assistant or hire an assistant to do that, have somebody go through the events in the area on a weekly basis, create a list for you, filtering through the business events that appear to be good, maybe see on LinkedIn or on other places who are the people joining the event. And then if it makes sense, maybe join some of these events and do some purposeful networking. My take, I don't personally like to go through these things. I've seen that they waste more time than they actually, compared to delivering results. So I prefer to stick to private clubs, private business clubs, and also start building up my, I would say, industry experts or industry leaders database, which will serve us well when it comes to creating an affiliate network. Because the idea is networking is going to take a long time, so we want to get the most out of it, and the way we get the most out of it is by creating long-term relationships with people and being always transparent and honest about what we want to do together, but also then leverage other people's network and maybe create a win-win situation where people become our affiliates, and we will talk about that later. Now, in terms of network, I never push network in terms of give me business deals or do you know somebody who's selling the business. I like the idea of approaching it in a very informal way. I like to exchange ideas about business, explain a little bit about what I'm trying to accomplish, what I want to do in the business acquisition world. And what I've seen is that if you network with the right people, things come on their own, because other guys might know deals that are available, or they themselves might be selling a business that they want to spin out to you. And so these things I've seen come quite naturally if you network in a very informal way. You don't take it too seriously, and you don't push it like a fucking cheap salesman, right? So my idea is, for networking, there are really tons of things that I can cover when it comes to networking because I've seen that all. But my recommendation and what I would like to do all the times is just stick to private business clubs. They're the ones that deliver the highest results and the better outcomes overall, okay? You could also, now that I'm thinking about it, think about joining these communities of professionals. So, there are certain communities, like communities of doctors or accountants or people like that. You might want to go through events where all these people are going, if, of course, you want to buy businesses in that industry, because they can be a good opportunity to find deals. I haven't tested it so much, to be frank, because I stuck with private business clubs the most. But it is also a decent idea. Again, I like the idea of being very ruthless and selective with the places I go to for networking, because when I'm going there, I need to be able to add value to these people, because that's the purpose of networking. But they also need to be able to provide value to me. So if I go there as a business buyer, I can potentially acquire assets, but I need to be able to find somebody who's selling the assets, or at least somebody who knows somebody who's selling assets. And if I can't find that, there's no point in being there, really. So that's my take about networking. It's a little bit of a gray area, to be frank, but still useful, because you can integrate like one event per week in your schedule and still get some decent results out of it if you go to the right places again. Now, let's cover affiliates before social media so that I can tie it up with networking. The sun is burning my leg now, but we'll keep this thing going, and hopefully you're sticking to this. Don't drop just yet, because we're not done with it. We still have quite a lot of stuff that we need to go through. Now, why do I separate affiliates and networking? Because networking is more like an informal thing. Like, I'm interacting with you and I'm sharing what I'm doing, you're sharing what you're doing. We see if there's an opportunity, or maybe in the future there might be an opportunity to work together. It's very informal, right? Affiliates are more like industry experts and people in the industry that I know have connections in the industry and that I want to reach out to create a win-win situation. And what I mean by that is this. I'll give you an example. Let's say that we want to buy clinics, and we know that in the industry there are a lot of doctors and dentists that own clinics or work for clinics in various clinics. Let's just put it this way. What I would like to do ideally is to connect with some of these doctors, dentists, and medical professionals, because I can propose to them to say, hey, do you know anybody who's selling a business? We might create a situation where if you make a successful referral, you get a piece of the deal, or pay you a referral fee or something like that if we close the deal successfully. And so what I'm trying to do there is, one, to offer an opportunity to win both, but also I'm looking for a way to expand my network using other people's network. So if I can connect with 10 professionals and every person knows 10 people, I'm immediately reaching out to 100 as a consequence. Plus, these people might have been in the industry for 10, 20, 30 years. They're certainly going to know better than I do who is in the market, who's interested in selling, who's in the process of selling, who tried to sell the business in the past but failed. And so they're going to be able to point me in the right direction very effectively. And the way you can find them is various ways. Networking, you can call them if you want to. You can also email them. You can do different campaigns for affiliates. Or you can use social media. Social media is very effective from that perspective, especially LinkedIn, because you can target specific professionals, reach out to them in a very informal manner, and chat a little bit more about what they do, what you do, what you're looking to do, and just offer them the opportunity, right? I'm just going to propose, hey, I'm looking to buy some assets. If you know anybody, we can have a win-win situation here. And you might say, well, not a lot of people are going to be responsive to that. Well, it might sound crazy, but I've had very good results with this, because ultimately it's a non-invasive thing. So it's almost like saying, I now have you in the back of my head. If in the next 2-3 months something comes along, I can give you a call, and if the business happens to close, I make 2-3% of it, or maybe I make a fixed fee out of it. Again, depends on rules and regulations of your country, but it's a win-win. So a lot of people will be appreciative of that and will be very responsive to that. And here's where it becomes interesting, because I want to split affiliates in two separate categories. So there are the regular, and then I would call them the hardcore, right? Because I want to have two tiers of affiliates. There are some of them that are just gonna be very easy about it. They couldn't care less. If something happens, they'll give you a call, but don't count on them too much, right? Those are the regular ones. The hardcore are the ones that are actually into this because maybe they already know somebody, or they know they can add value to this proposition. And so they're gonna do a little bit of work on your behalf too, if you are able to train them correctly. And so ideally what I'd like to do is to have a bunch of regulars that bring leads that might be qualified, might not be qualified. I will need to talk with these business owners multiple times to ascertain whether or not the business is a fit. But then I also have a few hardcores that already know what are the criteria that I use, and that will only send me deals that already match my own acquisition criteria. And so what I will do then is I will have two networks of affiliates. One of them will bring me, let's call them leads or cold leads, right? The other will bring me hot leads. They're already qualified. We just need to have an intro meeting, start collecting information, potentially do a due diligence. So there are a little bit of a difference here. Here, they do less work. You need to do more work afterwards to select the lead. Over here, they've done all the selection on your behalf. And of course, you might want to pay these two people a little bit differently, right? So if you pay a percentage of the deal, it's going to be different percentage points. If you pay a fixed fee, it's going to be a different fixed fee. But the point is, they're going to be rewarded differently for the effort they put in. And affiliates have been very good because the more affiliates you have, the less work you need to do. And it takes a bit of time to build these relationships, but once you have them, it's a win-win for both, because they will keep bringing you leads, and if you do multiple acquisitions, they will keep getting rewarded for bringing you leads. So it's going to be very, very beneficial for both sides, and I've seen people being very excited about this. So you can try that out in your industry, in your country, see how that works. What I've seen is that, again, it works very well. Sometimes there will be some redundancy between the people you reach out to via emails and calls and these guys' introductions, because it just goes without saying, if you're tapping into the entire market with these two tools, then these are going to be a little bit of an overlap. But the beauty of it is affiliates will strengthen that relationship, because as I said, if you're introduced by a third party that is a trustworthy party, like a medical doctor that used to work at the clinic, for example, then people are going to look you into a different light compared if you just reached out via email or calls. The education process here is going to be longer compared to getting introduced by an affiliate. I hope that makes sense. So affiliates are huge. They're, again, less trackable, but what you can do is track how many affiliates you got and how many opportunities you're getting on a weekly or on a monthly basis, and based on that, see how the pipeline of affiliates is working. In terms of social media, I think it's a bit of a complex game, because it kind of like works in conjunction with all the other channels, because social media is an alternative tool for reaching out to people. So you can use it both for networking purposes, for finding affiliates, but also for reaching out to business owners directly. And of course, LinkedIn is the best possible social media tool that you can use. Facebook is also okay. Instagram I haven't found to be excellent for this. Other social media, not really worth the time, at least from what I've seen. I mean, LinkedIn really pays huge dividends, not only because you got Sales Navigator where you can filter people based on specific, keywords, criteria, industry details and stuff like that, but also because the database is huge. There are a lot of search queries that you can use. So fundamentally, it's much more detailed, and it's also a very professional platform. So you're going to be looked at in a different light if you reach out from LinkedIn compared to that if you reach out from Facebook. It's just the way it is. So from a social media perspective, I would say LinkedIn is the way to go. You can use it for all these in conjunction with all these, and you can use it for finding leads in all these categories. So reaching out to people on social media should have the goal of collecting some kind of information from them. That is either their phone number, their email, or maybe schedule an in-person meeting if you're able to do that. But the point is, it's before you even send an email or a call to this guy, you initiate a discussion. There are certain templates that you can use. I'm not gonna share anything with you because it depends on your industry and your country again. But the point is, if you connect with the person professionally and there is somebody who's interested in either being an affiliate or in selling the business, then you can take it to the next level, have a call with them, an email, a meeting, or a Zoom. And so social media works very, very well. It's very underestimated when it comes to business acquisition, but it works so well because all these other channels that I just mentioned are professional. And what I mean by that is simple. People use emails, phone numbers, and they network with other people for business reasons. So invariably, when you reach out to these channels, they're going to have a certain barrier that is up because they're wearing their business armor, right? Like the suit that I got right now that is burning for the sun that is in front of me. But the point is, when you reach out on social media, it's a bit different. It's a little bit informal, but with LinkedIn, it's not so informal. The point is, sometimes people are on social media wasting time or reading articles or doing something that is not productive. So they're going to be in a different mindset. That's just what I've seen when it comes to reaching out to business owners or professionals. And so you might get replies from people that never answered your emails or your calls, but you might get them on social media simply because they're more responsive there. That's fine. The point is, we want to maximize the chances of connecting with every single business owner in your industry to understand whether or not they're motivated in selling their business, and ultimately qualify them to understand if that business is ultimately something we can buy. Because if it is not a fit, we're just wasting time. And so social media ties perfectly with this strategy because it creates that informal channel that it's kind of like a added benefit to the system. When nothing else works, social media might be the way. And again, depending on where you are in the world, the industry you're in, social media might work better or worse. I can't really tell you that. I used it in many different industry and it is effective overall. The level of effectiveness varies, right? You reach out to people, you don't spam, of course, I already mentioned that many times. And the goal, objective, is to ultimately connect with them, the email, calls. Of course, didn't mention that before, but it's always personal phone call, personal phone number, and personal email. We don't want the institutional one. Let's just cut the crap, right? If we just here to talk business and you're really motivated in selling the business, you're going to give me your personal phone and your personal email. Otherwise, what are we talking about, okay? So, again, social media, a little bit of an art, less so science, but you can track the amount of output that you do. I don't recommend you use tools for automating social media. A lot of people try to sell you courses or tools that work better and that can make your social media outreach go on autopilot. That's crap. They're gonna ban you. they're gonna flag you. It doesn't work. What I've seen is that if you do outreach on social media, it has to be done manually, and to do that, you also need to have high level personalization. So as I mentioned into emails, you can't just spam a single message to everybody. It has to have an element of personalization, and it will make the person interested enough in what you're saying to at least read the message. Then when he reads that, I'm all good, because he might not be interested. But what I want him to do is to read it, because if he's then interested, he's going to reply, and then we can start a conversation. A lot of other things I can discuss through social media, but you need to try and test. We use it a lot of times when we build a done for you strategy for our clients. Many people don't believe the power of it, but it works. It works even for businesses that are above $25 million. I found deals that were 50, 100, 150 million in value through social media. So people underestimate the power of it because they just believe it's a little bit of a joke. It's a play, it's kind of like a game or something like that. But in reality, it works very well because it lowers the threshold of people, their barriers, and some of them will be more responsive to it. Brokers and investment bankers, we kept the better, the better guys at the end. Now, certainly, if you are starting the process or if you already have DealFlow, you have worked with business brokers and investment bankers. This is probably the most obvious answer that a lot of you might be thinking about, so it might have been in the first place. But I put it last because there's a problem with this, and I'm not saying they don't work, because they do. The problem is that they will share with you deals that are on market, so I would say listed opportunities. Let's call it listed. And what is the problem with that? Is that you're not going to be the only bidder. You're not going to be the only buyer looking at that asset. They're going to send it to other people, and the best offer will win. We don't like competition. I never like competition when it comes to deals, because it puts a pressure on you that you don't want. You already have tons of other things that are going to put pressure on you. Certainly you don't want to compete with tens of other people or buyers that might be more liquid than you, that might have a better offers than you, that might just overvalue the business and then don't close the deal and completely fuck up a situation that might have been good for you. So the point is, investment bankers and brokers might have very great opportunities, and they might give you access to opportunities preferentially if you have a good relationship with them. But ultimately, most of these deals are going to be pitched to a lot of people, and I don't want to compete. Most of the things that I mentioned to you so far will put you in front of business owners that are outside of the market, that don't have their business listed anywhere, and you can have a one-on-one interaction with them so that you can ultimately close a deal and have a preferential access to the deal. So you increase your leverage 10 times. Investment bankers and brokers can help you because, of course, they will have part of the work already done, and I'm not going to talk about my opinion about this because then a lot of people will get, will go crazy over it. But let's just leave it at, you need to know which investment banker and broker to use. There are certain ones that are excellent, others less so. The point I'm getting at is a lot of times people invest all their time working with these two people, and they're only going to look at a portion of the market. They're never going to tap into the off-market opportunities, which are ultimately the most profitable ones and sometimes even the better deals overall. So you can still use them, and you want to use them because every once in a while they might have a good deal that is worth looking at, right? But I wouldn't rely on them alone for finding your deals. It's almost like saying, I'm going to subscribe to an online platform that is listing companies, and I'm going to use that for finding deals. Well, dude, everybody else is subscribed to that platform. there are going to be tons of eyes every single day looking at these deals. The good ones are going to get sold quickly. The only ones left are going to be the bad ones. Sometimes they're going to be businesses that have been listed for 6 to 12 months that nobody wants to buy. And the problem in looking at all these things alone is that it's going to create a skewed perception of what the market is. Because you might be looking at businesses that are listed and say, okay, then this industry is not good, or there are not enough opportunities in the industry, or I guess these deals are not worth buying. Well, in reality, if you were to build a right system here in the back end and find off-market deals, you would realize there are tons of good opportunities in that market, tons of good deals, profitable companies, owners that will sell for a reasonable price. But you never really looked in the market. You only looked at a portion of the market. And so that's the concept I want to stress here. You use these, but you also build this. Because the combination of the two, the strategic combination of the two, will enable you to tap into the entire market. And what I didn't mention, but it's kind of obvious, is that by using these, you're going to reach out to businesses that are listed on sites or through brokers, and so they're going to mention it to you. So ultimately, you're going to get in contact with them if the business is listed. Alternatively, you're going to find an off-market deal. So the point is, you're going to be able to contact all the businesses, no matter where they are and who they're listed with. My point is, don't rely on tools alone. Don't rely on third parties alone. Create your own deal origination platform, your own DealFlow pipeline that you can then use and leverage. You can have that built up by somebody else. You can have your team work on that. You can work on that on your own if you're alone. But the point is, it's mandatory to have multiple channels, because what happens then is, and we're into the putting it all together, is that we're going to have a very comprehensive strategy. And what will happen is that if this is our lead pipeline, we're going to have a lot of channels that are bringing us deals, right? And we're potentially going to be able to tap into the entire market. If we only had one, we couldn't really realize if we were looking at all assets. Plus, if that channel for one reason or another were to be shut down, maybe the broker we were working with retires, or the investment banker we were working with relocates, or stuff like that, then all of a sudden we have no DealFlow pipeline anymore. And that's a big problem, because what I've seen, and also one of the mistakes I made myself, I might add, is that you ramp up your DealFlow pipeline, you find businesses for sale, good deals, stuff like that. You pick a few of them, you start negotiating, you get closer to the finish line, you're about to close the deal, you forget about anything else, you start due diligence, you stop looking for deals. Once that deal is at the finish line, it doesn't close. And then you're screwed, because you need to start the process all over again. And so you're kind of like going through this process where you're ramping up operation and then boom, you go back to zero, and you need to do that all over again. What I want to do is create kind of like a pipeline of deals that is ramping up consistently, and then it keeps growing and delivering, so that once I pick one, then I go up here, but if something bad happens, I'm back here. And I can continue getting leads and opportunities and pick up a new one and start another negotiation. And so the time between the negotiation of one deal that didn't close and the second one is reduced. So I might be here, here, here. And so I'm trying to prevent challenges down the line, because I know that not all deals are going to close. And so if I do this and I have a constant inflow of leads, one, I can negotiate more confidently on any table. But then, even if the deal falls apart, I can start one immediately afterwards. I don't need to ramp up my old pipeline again. And so I can look at more deals, try to close more deals within a short period of time, maximize my chances of getting a deal done. And that's ultimately what we want to do when we put this all together. Because the strategy itself will necessitate us integrating all these things. And what will happen at the end of this is, of course, this that I mentioned before. But what you will realize is that, well, if you're doing that on your own, you might need to schedule your day very aggressively to be able to do all this. If you have a team, it might be a little bit easier to do. But the point is, most of your time is going to be allocated towards negotiations and closure of deals. And you're not going to be wanting to invest tons of time finding deals once you have transactions that are good and that you want to buy, because the ultimate goal is buying a business, right? And so when you have built a system that works on its own and that keeps bringing you leads, you can actually allocate all this time towards negotiations and closing. If you don't have built a system this way, you will constantly be struggling and juggling between two things. So maybe you will allocate half of your day toward sourcing deals, half of your day toward meetings. And you will keep going back and forth until you make confusion and you might compromise both things. And I'm saying this because I've been in the situation myself where I needed to check for new deals, but at the same time I was negotiating a transaction, and I ultimately ended up jeopardizing the transaction because I was thinking about something else. I was going back and forth in the city and I couldn't concentrate on the deal, which was the most important thing. And so my objective there was, let's create a deal flow pipeline that even if I'm not around, brings deals, might not bring as many as when I'm focusing on it, but it still brings opportunities. So I focus on this and I still have an element of deal flow that is working and is bringing in transactions. And then again, it becomes all about qualifying the deals and meeting the person and getting in front of these guys. And what is interesting with this strategy is that, as you've seen, most of these channels want to get in front of the person as fast as possible if the guy is motivated. But we all understand that some business owners might only be partially interested in selling the business, or they thought about it but they don't want to do it now. So the industry is complex because it's not something like, I want it now, let's make the deal happen. A lot of them are going to be warmish but not ready yet. And so when you have multiple channels like this, you can also create a nurturing process to keep in touch with them. And 2, 6 months, 12 months down the line, a lot of them are going to get back to you and say, okay, I decided to sell now. You're still interested? All of a sudden you get a new deal. But you wouldn't never gotten that deal if you didn't have a system that reached out to them in the first place. And so my idea is we reach out immediately, we build up the relationship. It doesn't matter if the guy is interested or not, but we keep in touch. Then later down the line, deals might come to us for the work that we've done early on. And so we focus on the ones that are motivated now, but at the same time, we keep building the relationship because others might want to talk about an exit 6 months, 12 months down the line. And that has happened to me quite often, to be frank. So I think that's pretty much it. I covered a lot of stuff, and there certainly is more that I can disclose, more strategy, more channels. Those are just the main ones that I felt were worth mentioning. When we do done for you structuring for clients, we generally go much deeper than this because it all comes down to the industry you're in, the country you're in. What is it that you want to accomplish? Do you want the opportunity to be filtered? Do you want to collect financials before you talk to the guy or not? There are many variables that need to be considered. But the point is, if you are alone or if you are with a small team and you wish to get professional support in building up a deal flow pipeline, you can check the form below. We can have a conversation around it. We're kind of booked up pretty much all the time, but provided we have a few slots, we can talk about how we can support you with this. We only take a few clients really because it's a very strong effort, as you can see, and we want to do it right because the ultimate objective is to bring as many motivated sellers to your door as possible so you can close the deal, because we all understand that buying a small business is not an easy fit. A lot of people online will try to pitch you the idea that it's easy. Well, it's not. It's very complex. But at least if we can streamline the input and we can bring into the funnel the right amount of motivated sellers, so quantity, quality, and quality on repeat, then we can systematize the next steps, and everything that comes after will become a lot easier. So the discussion will be easier, due diligence will be easier, closing will be easier, finding the professionals that are going to help you close the deal will be easier. So again, you could use these strategies on your own, have your team watch this and maybe take away something away from it. Or if you're interested in working with us, check the link below. My team will reach out and we will have a conversation around potentially working together. This is it. Bye for now.